All right, everybody, welcome back to the Money Mantra. This is part two of our back testing strategy training. So far we went over the parabolic SAR indicator. We also went over the Donchian channel, and now we're just going over the MACD. I'm just breezing over it, but these indicators have so much to offer when you really just dive in, watch additional videos, and seek to understand a few indicators, not the entire world, because trading is big. Um, so let's go to this trading example right here. This is the example that I actually got a profit on. So, oh wait, let me get back into the MACD actually. Sorry, y'all. So again, if the MACD crosses over, that is a huge, huge, huge indicator that the market is going to change. Like I can circle. Let me bring this down so we can see. There we go. All right, so we can see right here, we see that the MACD actually crossed, right? The blue line is the MACD. The blue line is the signal line. The orange line is the MACD. When the signal crosses down, that is a confirmation for a sell. When the signal crosses up, that is a confirmation for a buy. As long as it's above, that's just a confirmation for a buy. As long as it's below, that's a confirmation for a sell. Now, in this example right here, we're going to put everything together. So when I came into the market, I saw that it was a green candle forming. I saw that it was above the SAR, telling me that the market was above the trend. And I also saw that it was above this orange middle line. Now remember, with the Donchian channel, there's the resistance line telling you where price had a hard time getting higher than. Then you have your support lines telling you where price had a hard time getting lower than. This middle line is the average of both, right? It's the average of both. So just to dive a little bit deeper into the Donchian channel, if the candle is forming above that line, again, that's another indicator that this price is going to continue to go up. It's above average right now. So I had my green candle. I had it above the average price, telling me it's going to go higher. I also had my SAR below the candle, and I had my MACD signal line. I had my signal line above the MACD. So these were all amazing indicators to get in for a buy. Now, one extra tip you can use for the Donchian channel is that if you see that it's flat, that's letting you know that the market is going to reverse and go the opposite way of which it's been going. Like we can see here, the market was flat, it was selling for a while, then it started to buy. If you see, and this is my new favorite thing that I love, if you see that the Donchian channel is slanted, right? That is an additional indicator that the market is going to continue to go in the current direction, right? So if it's flat, the market's going to turn around. If it's slanted, the market is going to continue in the current direction, right? It's kind of like um, it's like getting an exit, right? If we still using the driving analogy, it's like an exit, and then it's going to continue its pattern here, right? Once it switched to a new place. Now let's get into the examples, all the examples that I have today that lets me know that this strategy works and is profitable. So we have our first one that we saw, which is the trade that I was in. Again, if you guys follow on Instagram at Money Mantra Cha, you will see the results from this trade was about $587 from a $20 risk, right? So we had everything we need. If you guys can see all of the confirmations on this candle, right? Just drop some sevens in the chat. You see we have a green candle above the middle line. The SAR is under. The MACD is over. And we have a slanted Donchian channel, right? All of that was telling me to go for a buy, which I did. And that's how I was able to secure, right? About, I think it was like 20 pips, right? Because you don't need a lot of pips, right? You don't need a lot of pips, right? Yeah, just use your vertical lines because they'll let you know the entry. Because look, remember, y'all, the first thing we did was set up our support and resistance, right? If we're going to go backwards, the first thing we did was set up our support and resistance. So that was another confirmation for a buy. I saw that my candle was forming near a support line, right? That's the first thing I did. And then I checked my confirmations, right? I saw that it was slanted. I was able to take profit. So that's example number one. Example number two. This is the second, it's going backwards, but this is the second example. Just letting you know that this strategy works and it will go into profit, right? So we have, all right, so we have our resistance line here, right? And we have our support line here. We had candle activity there. So we have our red candle, right? Letting us know that the market was selling. The sellers currently had control. We see that it's forming under the average price, letting us know that price is going to continue to go down, right? We had it under the SAR. So far we have 3 confirmations for a sell. And then we did not have a flat bottom on the Donchian channel. We had a slant telling us that price was going to continue to sell. Not only that, we had our red bars on our histogram, and we had the MACD crossover. So this was really a perfect setup, right? If you guys can see all of the confirmations on this candle and that makes sense in terms of a sell, just drop some sevens in the chat, right? This is the candle we're focused on. Let me just move it over, right? And even if you were in this trade for a short period of time, you still could have gotten about, well, depending on how low you go, you still could have gotten about 78 pips, which isn't bad, right? And let me actually show you guys how to use this box really quick. This is just going to be a random gem, but you really should calculate your risk to reward before you get into the trade, right? Once you get the confirmations on the candle, right? Once I get the confirmations on the candle, I'm going to come over here, right? I love TradingView because they have a bunch of tools that help you take notes on your chart so you can actually track your trading journey, and keep your previous areas of support and resistance, because price will revisit those areas. Now remember, if you're buying, you're going long, and if you're selling, you're going short. So you come down to this tool, and as we can see from this trade that the black line is currently on, we decided to go for a short position. So we're going to click short position, right? Now, at the top of the, we're just going to click at the top of the candle because that's where we're getting into the trade. We're going to click at the top of the candle, and then we're going to click on the box. You can answer this if you want. Let's just say your account size is 10,000. Your entry price is telling you this is the top of the candle. That's where you selected it. Let's say that's where you got in. Now, this is extremely important. You can make your risk to reward 1-to-1, meaning that let's just say you wanted to get 50 pips, right? However many pips you want, always put that number at a 0. If you want to get 50 pips, you will put 500. And if you wanted to, say, put your stop loss at 50 pips, it will also be 500. That's a 1-to-1 risk to reward ratio, right? So if the trade goes opposite, let's just say you'll lose $10. If the trade goes in your favor, you will walk away from the trade with $10. However, your risk to reward ratio should really, what I like to do and what has also made me more profitable is making my risk to reward ratio 1.5 to 1 or 2 to 1. So let's just say I wanted to take 100 pips profit, but I only wanted to do a 50 pip stop loss, right? Now, when I do that, you can see, once you can see it's telling me, because I got in for a sell, this is my profit zone is green. This is my resistance zone, right? This trade, as you can see, it hit profit, right? We're looking in the pads, we're back testing. This trade hit profit. Not only did we have all the confirmations, but if we win this trade, we're getting 100, we're getting $10. If we lose this trade, we're only losing $5, right? Because we didn't do 1-to-1, we did 2. So if the trade continues to go in my favor, because I have all of those indicators, I'm going to make more. But even if I lost 2 trades, I'm technically still in profit because I doubled my profit zone, right? If that makes sense, drop some sevens in the chat, please, because that was a mouthful, but I really hope it made sense. I'll do another example as well. If you want me to explain it again, just drop a question mark in the chat, because we have 8 more examples to get through, which is just going to continue to prove this theory, right? Repetition is key in trading. Yes, that's the reason why I love that tool. Whether you go short or go long, It calculates your stop loss and your take profit for you. All you have to decide is how much you want to make in that trade. That's all you have to do, right? So we're going to move on to example number 3, right? Right? Where we had all of the same things, right? And this is back testing your strategy. You don't have to use these indicators, but whatever indicators you like, if you think you understand them and you know how to count the confirmations, go back in the past and see how many times those confirmations align with the buyer to sell, and then you will determine your win rate. Out of this literally was pretty good. I only did 10. I should obviously do more to get a higher accuracy rate, but we got some good trades here. They all took profit. So here's another example. Let's just say we were just coming into the market. We said, okay, I feel like trading right now. And let's just say we set up our areas of support and resistance, right? So we would have saw that this was the area of resistance, right? And this was the area of support. How do we know? Because the candles are staying in that zone. That's the first thing we know. That's already there. Now we have our indicators. We have the red candle, right? A red candle is telling you the sellers are currently in control of the market. And their goal is to keep the price going lower and lower and lower. That's their goal, to drive the price as low as possible, just as the buyer's goal is to drive the price as high as possible. So we have the first indicator for a sell. The second indicator, we have the candle falling under the middle line. So it's already below the average price, which means that sellers have the potential to drive this market even lower than it already is. The third thing we have is the SAR, the parabolic SAR, telling us that the trend is currently selling. The market is currently in a bearish selling trend. We have 3 indicators that we need to get into this trade already, right? But let's keep going. We have our flat, right? Donchian channel. The candle doesn't have to be close to it. It just has to be flat, telling you like this is a barrier. Like do not drift on the side of the road, right? So we have 1, 2, 3, 4 indicators. Then what else do we have, guys? What does the slanted bottom tell us? Does it tell us that we should buy, or does it tell us that the market is going to continue to sell? Somebody let me know. Drop a B for buy or S for sell. Yep, exactly. Exactly. And we know this why, because we just counted the indicators. We have no doubt in our mind so far that it's going to sell. But we're going to get a little bit more G, and we're going to look at the MACD, because not only do we have a red histogram telling us that price is going to continue to drop with heavy momentum, but what else do we have, y'all? What's the very last thing we have on the MACD letting us know the price is going to sell? Exactly. We have the signal line crossing below the MACD, right? We have the signal line crossing below the MACD. So what are we going to do? We're going to go short. We going short. We going to get in for that sell. What you thought we was going to do? Take profit. Duh. That's what we going to do. So we're going to click this, and we're going to click short position again, which I've already done. As you can see, when I back tested the strategy, I'm going to click on it, right? Let's just say this was my entry price. We put it at the top of the candle, and we wanted to set our stop. Oh, let me tell y'all an easy way to set the stop loss. This is really about to blow your mind. The easiest way to set your stop loss is to set your stop loss, whatever you decide you're getting in. We decided we was going to get in on this candle. Maybe it was this candle. We decided we was going to get in on this candle. You want to set your stop loss above the SAR. You want to set your stop loss above the SAR. So that's going to be your stop loss, right? So we're going to go there. The stop loss price is, let's just lower this to make it, because you can do that. So now we have our stop loss price. If our stop level is, let's just change it to 700 to make it easier. If we change it to 700, what do we want our profit level to be? With a 2-to-1 risk to reward ratio. Yep, exactly. Now this may seem like a lot, but with Forex, you have to give your trade room to breathe. Because I've been in too many trades where I psyched myself out and I thought my analysis was wrong. However, I just didn't give my trade enough room. So yeah, we're gonna do 1400. Bam. Look at that. If the trade would have went up, we would have only not lost that much, right? But if the trade would have continued to sell, which it did, look, let me just show y'all how this trade continued to sell. Boom, this trade continued to sell. So it hit our profit target. We would have walked away of this trade in profit and it would have still been selling, right? We would have walked away from this trade in profit and would have still been selling. How much we could have made, y'all? Let's see. If we would have got out at our profit target. Okay. Okay, we would have got some pips. That's not bad. That's not bad at all. Right? So if you risked, let's just say, because some people like big traders, when you start trading and you get your stuff together and you have more capital to trade, when you start risking standard lots, a standard lot is $10 per pip, right? $10 per point that this market dropped. So somebody tell me how much money we would have made by risking $10 per pip in this trade. Nope, it'll be $140. Sorry, I'm just checking. It'll be $140 because you always divide this number by 10. Sorry, let me tell y'all. You always divide the pip number by 10. So even if the market only dropped 14 pips, but you was risking $10 per pip, you still would have made $140 off of that small risk. So yeah, that's example number 3. If it's making sense, y'all, drop a MS in the chat. If it's making sense, drop a MS in the chat. All right, y'all. Awesome. Awesome. So here is back tested example number 4. This strategy really go crazy, y'all. So let's count our confirmations. So let's just say we just got into the market and we saw this red candle forming. The first thing we're going to say, and this is what I used to teach in my classes. I used to say, let's make a little chart. Half for the buyers, half for the sellers. And let's count the confirmations we have. If we have a red candle, it's for the sellers. If we got a green candle, it's for the buyers to decide which trade we should take. So I have a red candle. Sellers get a point. I have a flat top on my Donchian channel. Sellers get a point. I have my candles under my SAR. Sellers get a point, right? I have the candle forming under the average line. Sellers get a point. I have my red histogram, anything red associated with sellers, anything red associated with buyers. And I have my signal line under my MACD. That's a clean sell. That's obvious. So seller 6, buyer 0. We already know we taking this trade, right? Let's get our tool, right? Let's choose short position because it's a sell, and then we're going to click on it, right? Well, we're going to set our stop loss above the SAR, which is already at a, isn't it? Look, we did this support and resistance earlier, and is it or is it not perfectly aligned with this SAR, right? We did this. That's the first thing we did, right? That's the first thing we did, and it's aligned with the SAR. So always set your stop loss above the SAR, right? Because the SAR is telling you the current price, the average price of the market, like where the trend is at. This was the average price at this time, right? So we already got our stop loss, right? So we can actually, but I also put the stop loss right here because this is another straight line, right? You can use the middle line the same way you can use the top and bottom lines. If it's slanted, it's going to continue to go down. It's going to continue to sell. So there we go. We set our stop loss. It's going to pop up when you start to use your MetaTrader 4 app. Once you, because you can stretch and move this, you can click on it literally and you can stretch it. Like you can make it bigger or smaller. You can drag it down to where you actually want it to be. So once you figure out what your stop loss is, it says your stop loss is about 133 pips. And look, the profit level was about 260 pips. That's about double. And y'all tell me yes or no if we would have left this trade in profit. Y'all let me know if we would have left the trade in profit based on, and we got double the reward, right? Yep, and then some. And it continued to sell. So you could have re-entered this trade based on the same indicators. Look, you could have got into this trade and made even more money, right? You could have made another 21 pips, right? Even if you was only risking $1, you could have made another $21 off of the same trade. But then look, not only do we have our support line, but then we have the switch. So who would have made profit on this sell and this buy? Who would have got in on both sides of the market? Drop some me in the chat, because we can clearly see where the change happened. We can clearly see that we already have a support line here. We can clearly see the Donchian is flat. We can clearly see the SAR has switched to the bottom, telling us the market's going to be on the uptrend. Not only that, what else do we see? This is the most glorious, beautiful thing you can see. This crossover, this is like gold. Like, if you see that the market is about to cross over, you can wait. Or this is the perfect entry, essentially. That crossover, you can always get in when it's above, it'll still be trending, but that's letting you know for real, go long. Like hold the trade for real. Like when it crosses, and then look, if we would have actually got into that buy as well, based on those simple indicators, look, it's going up so high I can't even. All right, let me just go up as high as I can. Even if we would only went there, right? If we was risking $10 per pip with a standard lot in a week, we would have made $280 just by looking at some green lines. If y'all trying to make money off of some lines and colors and sticks and shapes, just drop some sevens in the chat, because I could use $280. Like, that's about my car payment. And I just made that on my phone looking at lines and sticks, right? It's crazy. So that's example number 4. Let's look at example number 5, right? Because the thing I like about TradingView, they seriously will let you go back as far as 1999. Why am I setting up support and resistance from 1999? Because I can, and price goes back that far. But you don't have to go back that far. You literally can just look at the market. But if you really want to test the strategy out, just keep going back and finding more examples to say, okay, this works. And if you find that something is not working, try something different, right? So here's example number 5, I believe. Um, let's count our confirmations, right? And this is why it's important to back test. This is how I went from being a sometimes profitable forex trader to a daily profitable forex trader. I mean, you won't win every trade, but as you can see, if you would have analyzed the trades at these times, the market at these times, these were all opportunities to make money, right? So we have our green candle, indicator number 1, right? We have the candle forming above our average, right? So price is above average, is going to continue to buy. We have the candle forming above the parabolic SAR, again, telling us that the trend is going to continue. We have green on our histogram, and it's also facing up, telling us that the buyers are going to drive the price up. And we have the signal line above the MACD. And then the last thing you want to look for, or the first, depend, you can go either way, is the top line straight or slanted, right? The top line is slanted, and we have 1, 2, 3, 4, 5 confirmations for the buy. Are we going to get in for a buy, or are we going to sell because the candle's touching the top line? You guys let me know. What is the slanted line telling us? Yep. Yep, the slanted line is telling us to buy. And again, because we're going for a buy, we're going to click our tool over here. Instead of going short, make sure you switch it so your profit zone can be in the right direction. And we're going to go long, right? When you want to calculate your buy, go long, right? So we're going to click it. We're going to put it on where that candle starts. We're going to move our red box to below a SAR, right? The first SAR we see, which is right there. We're going to click on it. Once we open our MetaTrader 4 app, we go into USD, GBP. Don't do this, but we go into our pair we're going to trade. This is our stop loss already, right? Once we get into the trade and click sell, we know our stop loss would be 61 pips, right? So if our stop loss is 61 pips, how many pips should we be aiming for profit if we were going to go 2-to-1 risk to reward ratio? What would you put for your TP? Right? So we're going to put 100. Yep. Caleb, we're going to put 122, but always remember to add that 0 at the end. And again, this number don't have to be exact, but like Spicy said, 1200, just as long as it's about double. Always add that 0, because if you do 122 pips, that's only 12 pips. And you could get taken out the trade too soon. And the market actually does go in the direction you were analyzing. So we're going to double it. Let's just say 1200. And look at that. Did we take profit on this trade? You guys let me know if we took profit on this trade. If the answer is yes, we definitely did. We definitely did. And the examples are literally endless, right? They're endless. They're endless. Here's another great example. I don't even have to explain it. You guys should just be able to look at it and see. Candle, SAR, above, green, boom. We would have made profit there. Here's a sell example, right? Everything. We would have made profit there. And this risk to reward thing, y'all, I'm telling you, is a game changer, right? Here's another, look at this. Do y'all see this amazing example? Look at this, right? We got a little bit of risk, right? We got an automatic, we literally have an automatic resistance line, right? So once we know we're going short, look at this red candle, flat top, under the SAR, breaking the middle line, on a slant, crossover. Look at this profit. And we didn't even take that much profit, right? We didn't even take that much profit. We just did risk to reward 1 to 2. And it'll tell you right here when you highlight, that's your risk to reward, right? So we would have made money on this trade now. And how long that would have taken to make, let's see how many pips we would have made just in our profit zone. Okay, we would have got about 13 pips, right? That's not bad. But if you would have stayed in this trade, I'm going to try to go down as further as I can. If we would have stayed in this trade. Okay. 31 pips. That's not bad. If you're using a standard lot size, $10 a pip, when you grow your account size, that's $310. And the cool thing about this is that you can get into the trade multiple times. So if you got into this trade twice, risking a standard lot size, and you made $310 on one trade, but you got into the trade twice, you really made $600 just because you understand how to look at these lines and colors, right? It's really not that difficult. It's not about knowing every strategy in the market. It's really about finding what works for you. So this is something that's been working for me. It's really easy to spot. Don't be scary, because I know when I first started trading, I would only, especially when I was trading forex pairs, I would only go for things like 25 pips, like 30 pips, like not much, because I wanted to make sure I secured my profits. But now that I'm doing my analysis over a longer time frame and I'm using the SAR, like once the SAR sets my stop loss, because that's a clear area of resistance, my profit level is automatically going to be double. So I don't have to do much thinking, and I don't have to keep checking my trade because I trust the analysis that I did. And at the end of the day, the market is either going to hit your TP or is going to hit your stop loss. Is one or the other, right? So if we were looking at this market right now, and again, if the signals don't correspond or they don't align, don't take the trade. If it's confusing, like right now, I'm looking at this, I see the candle here, it's above the line, this is flat, it's too much. If it's too much, just don't get into the trade. It's that simple. Go to another pair. If we look at this trade, what's happening now? Ooh, y'all tell me. What would y'all do in this trade right now? Euro USD. Just by at a glance. What we doing? Buying or selling, family? Exactly. We will buy. We got a green candle forming near a support line under the SAR, right? Under the SAR, above the middle line, and this is above this, and that's green. So it looked like we going long on Euro USD tonight. Let's double check on the 1 hour. Oh, it's a little sketchy on the 1 hour. Let's check it on the 2 hour. Sketchy. We ain't gonna do nothing, but I'll text y'all individually when the market makes a move, or you can log in yourself and see what's going on, because everything won't always be aligned at the same time. Like this is not aligned. If everything's aligned, get in. If everything's, oh, see, look, this is decent. That's good. This is very good. This is good. Okay, that's the 4 hour. Let's check the day. Mm, nope. I ain't gonna make no moves yet because it's confusing signals. So make sure you guys check the things on multiple time frames. Use your indicators correctly. You don't have to change the settings. Set up your support and resistance. And I think that's all I have for you guys today on backtesting. If you enjoyed this session, make sure you definitely like, share, comment, and subscribe to the YouTubers. And for the people who are on a live session, if you can just share it on Instagram, let people know Cha is still trading. We really making money out here. My thing is about to stop again, but I do want to get into a trade altogether so that when we do take this profit, um we can see that this is actually a theory that works. So on the 4 hour is buying. Okay, yeah. Okay. So I see a red candle here on the day. It didn't cross for the day yet. It's about to cross. Y'all can see that it's about to cross, but it hasn't happened yet. Let's check the 4 hour. On the 4 hour, we have the signal to buy. And we can probably get about mm, a good, I would say 15 pips on this trade if you decide to buy Euro USD. You can test it in your demo account, but it may go the opposite way because it's not agreeing on the 1 hour. So, all right, that's selling on the 1 hour, but it's buying. Yeah, this not nothing's ideal now. You don't gotta rush it. There's like infinite opportunities, but that's it for today, guys. Have a good night. Again, please make sure you share this on Instagram. Let people know. Share the channel. And this video will be going up soon. I appreciate each and every one of you guys, and I hope that this makes you a more profitable trader. You're welcome, and good night.